You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again for the Crypto Rundown, the program here on the Options Insider Radio Network, where we go above and beyond our traditional stomping grounds. I'm not going to talk about your Tesla, your Apple, or your VIX options on this show. Nope, we're going to go a little bit further afield, explore what's cooking out there in the land of Bitcoin and ETH, talk about the volume, the volatility, the skew, the unusual activity, and a whole bunch more. My name, of course, Mark Longo from the TAG. optionsinsider.com, as well as, of course, from the network upon which so many of you are binging on these days. Network, of course, been running for, January will be 17 years. That's crazy. Crazy how long we've been doing this thing out here. Nearly a dozen shows firing off on the network. We know a lot of people are coming in to this show who are new to the world of options and derivatives. So first off, if you like what you hear, throw some stars, some likes away. It does help new people from the crypto world continue to discover the network. B, of course, we have nearly a dozen programs out there. So if you're a little bit newer to the world of options, some of these terms we're throwing around like skew and volatility, maybe they're a little bit overwhelming, scary to you, then check out all the other shows on the network like Options Bootcamp. A lot of educational content there that can help lure you to the dark side of the world of options out there. And of course, if you want to go above and beyond, you want even more content in your life. And who can blame you? TheOptionsInsider.com/pro is the place to go. Once you're there, you'll get access to an exclusive podcast feed, access to these live streams we're doing out here throughout the week, great shows, exclusive shows like Pro Q&As with some of the best minds in the world of options and derivatives, including a lot of crypto overlap on that program, as well as, of course, our Options Oddity shows at the end of every week where we break down all the unusual activity and a whole bunch more. TheOptionsInsider.com/pro is the place to go to learn more. As we head on into our first segment, it is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everyone, welcome to the Crypto Hot Seat, the portion of the program where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. Today's guest is a newcomer to the program and indeed to the network. He is Mauricio di Bartolomeo, the co-founder and CSO over there at Ledn. Mauricio, welcome to the Crypto Rundown program.
Thank you for having me here, Mark. Great to be here and lots to talk about, I'm sure.
Yes, should be fun. Let's get right into it. You haven't been on before, so let's start. Give our audience a bit of an overview of your background in the crypto space, as well as what it is you folks do over there at Ledn.
Sure. I have a bit of a different background, I guess, to maybe some people, what most people are used to. I'm from Venezuela. I was born and raised in Venezuela, so I was beat around by hyperinflation my whole life growing up. So when Bitcoin came into the foyer in Venezuela back in 2015, my family found it first as they were trying anywhere they could to protect the devaluating bolívares from inflation in the middle of horrible capital controls where you couldn't buy dollars, but you could buy Bitcoin. So we found a solution in Bitcoin. Since I saw how it helped my family, I couldn't stop, and others in Venezuela. I basically fell down the rabbit hole, and I've been spending my life in this industry since I saw it help people near me in Venezuela. So I've been really just doing my best to build back and to build and give back to the community. And the best way we could do that was just building a great service for people that needed liquidity and didn't want to sell their Bitcoin. So Ledn's flagship product, the company that Adam and I founded, what we do is, among other things, but our flagship product is we provide dollar loans to people that hold Bitcoin and don't want to sell it. And that could be for tax optimization reasons. That could be to plan and keep the upside for the Bitcoin. It's in the similar way that wealthy people in North America perpetuate their wealth by borrowing against their assets and letting them grow over time. We allow people to do the same in Bitcoin. There's a plethora of other services that people can use. And given the nature of this show, I think our dual cryptocurrency notes are going to be interesting for this audience because they are the product that resembles more the look and feel of options. But I'll pause there.
All right, a lot to unpack there, a lot for us to sink our teeth into there, Mauricio. First off, I think you get to be the standard bearer, the flag waver for our first South American guest here on the program. It's funny, we've had guests from all over the world over the years on this show. Of course, Europe, of course, Asia, many from the U.S. here. But surprisingly, not really any from South America, which is fascinating because that area of the world, as you pointed out, has very much been ripe for the vanguard of a lot of countries trying to be early adopters to a lot of these products as alternatives to their currencies, which are suffering severe hyperinflation. So fascinating to get that perspective here on the show this week, Mauricio.
Yeah, and I mean, I'm happy to talk as much as you want on that. It's a very different process the way somebody in Latin America gets into crypto and stable coins or Bitcoin than the one that people in North America follow. I find that down there, you see people acting out of necessity. You know, you get paid on a Friday. Your currency is depreciating to the tune of 100% or more per year. If you don't trade out of that thing by Saturday, you're going to be looking, your income could be halved by Monday or worse. And so you have two jobs: the job you have to get paid, and then your job to get rid of your useless currency. And that necessity pushes a lot of people to try things that they may not fully understand, they may be a little bit uncomfortable with, but they have to do it because the option to not doing it is so much worse. Whereas in North America, I find that the journey is most often a sort of an intellectual discovery journey because you're understanding monetary policy and you're reading, in-depth articles about how money works. Back down there, you don't necessarily always have the luxury to do that. You kind of have to jump into this out of necessity. And then once it works for you, you come back to it because of the convenience. So it's a different journey. And in many ways, it shapes how we built Ledn and why we built Ledn to be so simple and so easy to use, because people in those situations already have so much going on and so many things they don't understand. We wanted the platform that they needed to use to be the one thing that they felt comfortable with, or at least remove that element of friction from it. But again, it's very different processes how people come into crypto or Bitcoin and why. And because it's such a global asset class, you have to build with more than one group of people in mind. So it's something that I'm very passionate about, as you can tell.
Yeah, that's truly embracing the second half. We talk about cryptocurrencies all the time here on the show, but most of our guests, as you rightfully point out, are coming at it either from a technology perspective or as perhaps an alternative investment vehicle. They're not coming at it from its true nature as a currency, where you folks, as you mentioned, are embracing it by necessity for that use case. And it's a fascinating one. We don't have a lot of our guests coming on, using it to transact their day-to-day, going to the grocery store and trying to buy bread with it and all the typical use cases you would put a currency to. But you're right. By necessity in that region of the world, you have to. So it is a fascinating use case and one that I could certainly see being a gateway for a lot of people to embrace it just for a sheer lack of alternatives out there. But you mentioned some of the interesting things you guys are bringing to the table out there. I want to get into all that. Obviously, we speak to a very options-savvy audience. So one of the things that really resonated for us out there are your DCNs. So I took a look at these DCNs. They very much look to me as being analogs to what we would call here, obviously in the options world, covered calls and cash secured puts. Walk our listeners through these. What are we talking about? And how are these products very much similar to some option strategies they may already be familiar with?
Yes, and I think you hit the nail in the head. The intent of this product and the way you use these products is the product operates in pairs. So the pairs that we have live today are Bitcoin to dollars and dollars to Bitcoin. So in each pair, so let's start first with the Bitcoin to dollars pair. Let's just say you're a person that has Bitcoin. You bought Bitcoin, say, at $20,000, and you would be a happy seller of Bitcoin at $30,000 at the end of, say, October, right? So at Ledn, you have a couple of ways to earn yield. One, you have the growth account, which pays you, at the moment, it's 1%, the yield you can get on your Bitcoin. But you also have the option to use the DCN. The DCN is a product where you can go in and say, I would be a happy seller of Bitcoin at $30,000 at the end of the month of October. And based on that price and that month, you will get a yield associated with that contract. So you can then basically participate in the contract with as many Bitcoin as you would like to use. And at the end of the term, or at the time of maturity, at the end of October, if the price is at 30K or above, you don't get the Bitcoin back. You get as many Bitcoins you put in times 30K plus the yield. And if Bitcoin at that date is lower than 30K, you do not get converted into dollars. You get your Bitcoin back, but you still always get the yield. And similarly, on the dollar side, if you're starting with dollars but want Bitcoin, you would be selecting a lower price of Bitcoin than spot. And same thing holds, right? If you want to be a buyer of Bitcoin at 20K and you have $20,000 at the end of October, if Bitcoin is at 20 or below, you get Bitcoin. If it's above 20, you get your dollars back plus your yield. So in terms of the potential outcomes, it is similar to the way you mentioned it, a covered call or a covered put.
Yeah, it's fascinating because it is very much along those same lines. You set your strike in the case of the covered call. You set your strike where you're happy letting the stock go. And if you get the appreciation all the way up to that strike, you're a happy camper, then it gets called away. And vice versa on the short put. You set your strike where you're willing to buy the underlying, and then you collect some yield along the way. And if the underlying gets down to that level, you, of course, end up buying the underlying. So was that by design? Were you intentionally trying to mimic these very common use cases out there? Or was that just a happy accident out there, Mauricio?
It's so it always comes back from our clients, from what our clients want, right? Like that's how most companies build, and it's no different here at Ledn. So we had a lot of clients that came in and were looking for these types of structures. They said, I want to buy Bitcoin, but I want to buy it at a lower price. What can I get in terms of yield while it gets there? So we basically saw the requests come in from our clients. And of course, we've now been doing this for 5 years. So we have a pretty good understanding of the flows of our business when Bitcoin price drops or when Bitcoin price increases. So given the nature of our business, when the price of Bitcoin drops, many people in the platform either decide to sell Bitcoin to close their loans or other reasons. So we have now, we can basically project out how much Bitcoin we will be needing to buy at particular prices if the price goes down, and how much Bitcoin we would be needing to sell at particular points if it goes up, and we can tie that into our book of business. So it's a product that helps basically clients and helps us. The counterparty for DCNs is always Ledn. So when a client is taking on a DCN, it's Ledn on the other side who's buying the Bitcoin that they're selling, or who is selling them the Bitcoin that they're buying at maturity if the conversion event occurs. So it's a product of both the needs of our clients and something that benefits us at Ledn, and we package that up as a product.
Okay, fascinating, because that was my next question, which is what is generating the yield here? Because, of course, when you're doing the option side, if you're selling a covered call, for example, you're selling an option that has value, and that value is the yield. You sold that, and that's what you're collecting over that period, and vice versa for the put. If you're out there selling the put, you're selling that option that has some time value, and you are collecting that, and that is the yield. So let's say in this example, I'm using your Bitcoin to USD, which is effectively your covered call analog, for 1 month. So I'm coming in, let's say I want to do one Bitcoin, I'm going to sell it, let's say 10% out of the money. That's my strike I choose. What is generating the yield? Am I effectively staking it for 1 month? Is that what's generating the yield?
So the yield is to your point, when you are selecting to sell that Bitcoin at that point in time and at that price in the future, that has value to us, because we also know that as the price rises, we're going to see some of our clients take profit on their Bitcoin, or sell some of their Bitcoin to repay the loan at the higher price point. So we can model that out, and because we would know how much Bitcoin we will be needing to sell in that point in time, we can then engage in that contract with you, pay you that yield, that premium, the yield that you will make on the contract, for us to have the value of knowing that we will be able to buy that Bitcoin 10% higher than spot at maturity. Because again, we understand the flows of the business, and when Bitcoin prices rise, a lot of our clients take profits or close their loans to take advantage of that new higher price, and we can model that out and essentially enter into that agreement with you, which again, we will be able to buy that Bitcoin at 30K. And if it goes above 30K at 31 or 32, then we will make that economic benefit, which is largely what compensates us for paying you for that yield. And also the security of knowing that, the Bitcoin's not going to, we're going to have certainty at the price at which we're going to buy Bitcoin, so that we can settle any obligations that we may have, meaning that we're going to have some price protection. So for example, in the growth accounts, we pay interest on a monthly basis to our clients. So we at Ledn have a need internally to purchase Bitcoin every month, as well as selling Bitcoin every month. So we tie those with our clients' DCNs desires. And then in the event that there are orders or requests that come in that go above and beyond what we need or what we find benefit on, we will go out and effectively hedge that with a third party.
So you have enough of an offsetting book of business that you could take down pretty much all sides of these trades and be able to offset and generate that yield. Now, of course, one of the concerns we've seen a lot out there in the crypto space is the counterparty risk. We saw this, the FTX and a bunch of other names out there. A lot of people have moved over to the listed side as a result because they are a little bit scared of counterparty. You folks at Ledn effectively are the counterparty for all these trades. This put a little bit of extra onus, a little bit of extra burden out there for you folks, because you're effectively standing in there and guaranteeing the other side of all of these trades, Mauricio.
Yes, and we do this. We have Ledn is a very different, is built very differently than some of these other names that unfortunately, have put a bit of a black spot in the industry. At Ledn, I can tell you we've never lost a penny or a Satoshi of client assets. We were the first digital asset lending company to do proof of reserves at the stations. We do these every 6 months. That means that we have a certified public accountant that comes into Ledn, looks at the amounts or assets that we owe to our clients, looks at where we have assets in custody at our lending counterparties, at our trading counterparties, at our banks, and then ensures that we have enough assets to meet what we owe our clients, the liabilities that we owe our clients. And it's a report that gets produced every 6 months. All of our clients can go in and check it out every time it gets published. We also publish what's called an open book report, where clients can see how we are managing the assets and how we're lending the assets to generate the yield that we pay. And in those reports, you can see how much is being lent out to each particular entity. And there's also lots of insights into how we underwrite risk. So clients have a need for this. At Ledn, we believe that these types of services can only be offered through transparency and accountability. And we like to think we're setting the standard for transparency and integrity in this industry. So we feel pretty well suited to offer this.
Dealing with counterparty risk through transparency. And of course, that came very much into focus earlier this year. In the March timeframe, we saw a lot of concerns. It kicked off in the crypto space, of course, with Silicon Valley. So very much crypto lending came into stark relief. And of course, the risks of counterparties, because after all, a lot of these big banks were going under. What was it like navigating those waters earlier this year, Mauricio? And we saw a lot of focus, a lot of concern about counterparty risk, specifically in the crypto space.
Definitely. And listen, it was obviously, I don't have to say how unfortunate this event was, but what was shocking about it was that it came from a group that was seemingly backed by all of the right names and shaking all of the right hands. So it caught a lot of people off guard. And what came out of this was that really a lot of these entities were not saying what they told clients that they were doing. They had no sound risk management whatsoever. There was outright fraud going on in some of these. They had asset liability mismatches. They were taking open term deposits and putting them into multi-year payout projects like mining and others. So it was really the way I like to describe it was there was a complete absence of sound risk management, and there was just tremendous risk taking without any disclosures to clients or without any checks and balances from either self-regulation or third-party regulation. So a lot of that has basically ended now. That era of the Wild West is done and gone. You're seeing regulators across the world stand up and demand transparency from some of these services. In order for, if you want to offer these services to my people, you have to get registered. You have to basically tell us what you're doing. You have to be way more transparent, and you have to follow the same rules that everyone else follows for similar services. So at Ledn, we've been working effectively to add more transparency and more control since these events. And what we have seen is that people continue to need these products. A loan, in the likes of the loans that we offer, they're non-discretionary products in that people don't wake up one day and decide that it's a good day to take a loan, right? Like something comes up into their lives, they look at their portfolio, they say, I don't want to sell my Bitcoin, what do I do? So these types of things continue to happen. People continue to need their loans, and they want to work with the most transparent and trustworthy counterparty they can find. So at Ledn, we continue doing our proof of reserves attestations. We received our VASP registration from the Cayman Islands Monetary Authority. We created what's called the open book reports. We launched DCNs. So all of our products that we've shipped this year are focused around regulation, transparency, accountability, and more control. And importantly, because of the technical level of this audience, I think I can share this and not sort of throw people for a loop. But up until very recently, this industry was running like the banking model without a Federal Reserve backstopping the operations. And that was what created in many ways this domino-like effect. When one big group went under, all the concentration risk and absence of risk management, every chip started falling like dominoes because there was no lender of last resort. So what we have done as a result of this is we have restructured our yield operations into what's called our growth accounts. And what the growth accounts do is that they ring fence technically and legally the lending activity risk that happens out of that growth account to generate that yield. What do I mean by this? In the past, if you were using, say, a DCN with Ledn, which is a product that is not a lending product, it's a product where you are getting your yield based on a probability of an outcome. If you were using that product, but not our lending issue, and there was a loan that went impaired in the lending operations, your DCN would have been impacted. In the model that we have today, that is no longer true. Those products are separate and distinct. So if there's ever an issue out of any institutional loan that gets issued out of the growth account pool of assets, it will not impact the client's DCN, if that makes sense. So it makes the business way more robust, and it adds a lot more guardrails for any client using our products.
And you brought up the specter of regulation, which is always looming over the crypto space, especially here in the U.S. Very frequently, we have guests on who are talking about fascinating nuances or innovative new platforms or offerings in the crypto space. And for a lot of our audience who's based here in the U.S., they can't access those. But that doesn't sound like that's the case for you folks over there at Ledn. You are available for U.S. users as well, correct?
Our loan product is available in most U.S. states. Our DCN product, unfortunately, is not. So it is. We do have available services by way of our loans, which many U.S. clients use. The DCN product and a few other products, for example, our growth account is not available for U.S. clients, but we do have a yield product available for accredited investors. So if you're an accredited investor, you can contact us, and we're happy to walk you through the yield offerings that we could have that we could offer to you, as well as our loans. Unfortunately, the DCN product is not available for U.S. residents.
Would that fall under the private wealth offering you have over there?
Correct. The yield offerings for U.S. residents would be through the private wealth division. The DCN product is not necessarily doesn't require any accreditation for our international clients, but it did actually start out as an accredited product. We use our private wealth division actually is where a lot of our product innovation comes from, because a lot of our clients there come to us with their specific needs, and that's the division where we ideate and iterate on some solutions, and then once enough people are using them in this division, we productize them and make them available to everyone on the platform.
And we've been talking primarily about Bitcoin this entire show, but are any other assets on the offer over there at Ledn, or is it primarily around Bitcoin right now?
So today we support Bitcoin and USDC. That's one of the things also that has made Ledn so well suited to navigate all of this turmoil, is the fact that we have a very curated list of assets that are very, very deep and liquid. And that means that we have no need to convert those assets into a different asset to lend them out. There's always a market for the assets we support. We are in the works to add Tether to the platform. You should see that coming on in just a few weeks. And before the end of the year, we will also be supporting Ethereum on the platform.
Yes, a lot of our listeners obviously are big into ETH, so that's intriguing. So that'll be coming on before the end of the year. Well, Mauricio, I appreciate you joining us here. We have to keep rolling with the program, but before we do that, we like to leave our audience wanting a little bit more. So if you have any hints, any teases you want to leave with our audience for what they can expect coming from Ledn in the coming months, now is the time, sir. The floor is yours.
So, like I said, we are very excited to be supporting Tether as well as Ethereum before the end of the year. I will say that we get great feedback from our biweekly newsletter. I pen that actually every 2 weeks, and we write about what is driving Bitcoin markets and digital asset markets with a specific sort of flavor to Latin America. There's a lot happening there, specifically with Javier Milei in Argentina. We cover, why he got to where he is, what's behind his platform. So if you ever want to get into sort of what real life sort of trends, or what are the events and changes that are driving adoption for Bitcoin and digital assets and the emerging world in particular, which is part of where we're most focused, that's a great place to check it out. And you'll continue to see Ledn come out with some a lot more exciting stuff. There's some partnerships that I can't talk too much about, but there's going to be, I would say, stay tuned. You can follow us at HODL with Ledn. There's lots coming between now and the end of the year.
Of course, listeners, you want to check them out online. It's just Ledn, Ledn. Little fun spelling there, .io, the place to go to learn more. As we keep on rolling right on into our next segment, it is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everyone, welcome to the Bitcoin Breakdown. I hope you enjoyed that. It's always fascinating to get different takes on what we take for granted here in the option space all the time. Covered calls and cash secured puts. Those are different ways to approximate that same level of functionality. Not available for all the U.S. listeners here yet, but hopefully they're working on that behind the scenes. An interesting use case nonetheless. Very interesting stuff going on in the world of Bitcoin since our last show, which of course was 2 weeks ago. Don't blame us. All these holidays tend to fall on Monday, listeners, which is, of course, Crypto Rundown Day at the end of the day. So we're going back 2 weeks now to our last show. And the last show, Bitcoin was a little bit north of 26,100 roughly. Coming in to start the show today, 25,211. So down about 887 handles from where it was this time 2 weeks ago. And of course, we had a little bit of a range in between now and our last show. The high came back on August 29th, so right after our last show on Tuesday. The high was 28,089, and the low coming in today. Unfortunately, 25,054. We have recovered from that a little bit, of course. And now, vol-wise, we've been talking for a while here on the show about the death of vol, how anemic vol was getting out there in the crypto space. And it made a lot of sense. After all, we were heading into the dog days of summer, not usually a robust period for volume or volatility. And now that we're coming into September, we're starting to see a little bit of a turnaround. Of course, the sell-off in Bitcoin also sparking a bit of a turnaround in vol as well. On our last show 2 weeks ago, we had gotten back into the 30s, but on the low 30s. We were at 33.2 on our show last week. And before that, we were down in the high 20s, around 29 or so. So that was pretty anemic from a Bitcoin vol perspective, a product that is very much synonymous with volatility to a lot of people. And then, of course, has hit triple digits in the past. 29 and change was pretty low. Getting some juice back, getting some of its life back this week. 39.55 when we kicked off the show this week in the 30-day volatility. So more juice trickling back in. All you need is a little bit of dark side to spook maybe some of the hodlers out there. And then, bam, here we are off to the races. For a long time, the skew in Bitcoin was dramatically bid to the upside and kind of offered to the downside. These days, when we retreat a little bit in Bitcoin, we see vol getting juiced up, which is showing a little bit of concern to the downside, a little bit of premium to the puts. And maybe we'll discover that for ourselves when we get out to the skew in a little bit. First, before we do that, let's go a little bit farther out the term structure, see what's going on from a vol perspective. Let's go out half a year. Let's go out 6 months. And the last show was about 44.5. As you'd expect it to be higher a little bit farther out. Calmer, saner heads tend to prevail a little bit farther out. And this show also getting frothier, 46.6, so coming up a little over 2, about 2.1 points over the last couple of weeks. So yeah, vol starting to creep back in. Is it here to stay, listeners, or just a little bit of a blip? And if we continue to the dark side, I would expect more vol to come back in. If we rally slowly back up to, let's say, a 30K, maybe not so much. We shall see. The skew reflecting this near-term downside concern. It was already swinging to the negative on our last show 2 weeks ago, especially in the weeklies, the very near-dated stuff. They were about negative 3.5, about 3.6 to the dark side. Last week, over double that now, negative 7.5. So the near-dated weekly skew, very pronounced to the dark side right now. What is that showing? That's showing a premium, like we were just saying, a premium to the puts over the calls from an implied volatility perspective. So call that whatever you like. Fear, concern, interest, whatever is driving that. There is more vol in the 25 delta put, shall we say, than there is in the 25 delta call right now. Roughly 7.5 points more. Hence the skew, listeners. Getting out a little bit farther, let's go out a month, and things are a little bit calmer, but still markedly negative. Negative 2.25 it was 2 weeks ago coming into the show today. Almost a negative 4, about negative 3.85. So still going out a month, the bias, the concern, the fear is still to the downside, listeners. Now you go out 6 months, you kind of flip that script a little bit. It was positive 3, about 3.3 points on the show 2 weeks ago, and still positive this week, but a little bit less, about 1.75 points. So coming close to flat there, but still managing to remain a little bit positive, a little bit longer term. So what does that tell you? That tells you the Bitcoin options right now are pricing in a little bit of near-term concern, a little bit of near-term fear. Longer term, though, they're still pricing that premium back into the calls, which is historically the way Bitcoin has done things. Let's go out to Deribit, see how much is open right now. Again, we're coming into an inauspicious day, of course. We're recording this on 9/11, listeners. So we have, of course, seen the August paper roll off the board since our last show. We've had a week and change to see that OI start to pop back in. And, of course, a little bit of downside. It's going to spook some folks, probably drive a little bit of paper. That's kind of what we're seeing out there right now. On Deribit, we have exactly 200,000 contracts open right now. 200,000 calls open right now. It's up about 11,000 from this time 2 weeks ago. The puts, 103,000. It's up about 14,000. So 2-to-1 calls over puts. We've actually seen it get much higher on Deribit in the past. So only 2-to-1. Interesting. And of course, I expect if we continue to plumb the dark side a little bit, I expect that ratio to come in even more. So interesting to see if we can get inside 2-to-1 on the puts over calls. Let's get out to another product you folks like to use to sling some Bitcoin. And it looks like you're slinging some of it today. This is Bitto. It was at about a 13 when we kicked off the show. Down, not quite half a point, about 0.4 of a point from where it was 2 weeks ago. The ADV is hanging out right around 24,000 contracts. That is unchanged from where it was 2 weeks ago. What is not unchanged is the paper, listeners. BitO put up some numbers today. 20,000 contracts already on the tape when we kicked off the show. It's up to 22,000 now. So seeing some paper out there. What is lighting up the tape? Looks like there's a lot of action right now on the 12.5 calls expiring this week. So we're hanging out a little bit above those right now. And it seems like people were liking them. They were gobbling those up, listeners. So looks like we saw a bunch of them. Looks like about close to, a little over 3,000 have traded by now. And looks like paper was buying a lot of them for prices around 53 cents. So when the stock was around $12.93 at the time. So if you bought those for 53 cents with BitO around $12.93, what are you doing? You're effectively paying a dime over the intrinsic value of that. Obviously, with $12.93, the option worth about 43 cents. You're paying 53 cents for it. So you're paying a dime for effectively a week's worth of froth, a week's worth of swing for the upside bat. So it seems like some folks expecting BitO to bounce here from these lows right at 13, a little bit below it right now. Again, putting some of their money where their mouth is. Also saw some paper on the 17 strike, about 2,000 of those going up this week. Those are obviously worthless right now. They're trading for a penny. So whether some folks are just dumping those, they were long them and getting the heck out of Dodge, that does seem like that's could be a good chunk of the use case. They actually were a penny bid, so I'm guessing some folks just dumping those to get the heck out of Dodge. But there could be some folks taking a flyer for a penny as well. Again, all these options expire by Friday, listeners. So if you're buying the 17 calls for a penny, you're looking for a heck of a pop in BitO by the end of the week. Speaking of what's open out there in BitO right now, let's get out to the size positions. Let's do a top 5 out there. Number 5, we have 27,000 of the Jan 15s, followed by number 4, 41,000 of the Jan 2025 25 calls. Say all that 5 times fast. Number 3, 63,000 of the same year, Jan 2025 35 calls. We talked about those options before. Number 2, 68,000 of the regular Jan coming up next year, 65 calls. Again, all very fascinating strikes. And the number 1 size position in BitO, 81,000 of the Jan 2025 30s. So a lot of longer-term upside at play here in BitO. Again, not exactly surprising. That tends to be the way Bitcoin options usually trade, but still fascinating stuff nonetheless. As we keep on rolling, see if we can find some fascinating stuff as well in the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, the portion of the show where we break down everything lighting it up out there outside of the big dog, which is Bitcoin, except for right now when we talk about the top 10 from a market cap perspective. And let's see, cost you a little under $7 billion, about $6.9 billion to get into the top 10 this week. It gets you once again to Tron, so still looking kind of light compared to levels we've seen in the past, but not at its nadir either. Number 9, we have Solana, $7.3 billion worth of market cap. Solana obviously giving up some of the ghosts since last we chatted, as well. It's been in the mid-20s for a while, and they got to the low 20s, in the teens again now. High teens, though. Number 8, we have Cardano, about $8.5 billion worth of market cap. Number 7, it's Doge, so climbing the ranks as the others fall by the wayside. Doge clinging to life out there, listeners. Also 8.5, so roughly 20 million more worth of market cap. So just by the skin of its teeth, managing to outpace Cardano this week. Number 6, XRP, $25.1 billion. I know a lot of you are probably upset that we haven't seen more upside in XRP with all those decisions in the rearview mirror, but XRP just can't seem to get out of its own way these days. Number 5, USD Coin, $26 billion. Number 4, BNB, $31.8 billion. Number 3, the aforementioned Tether. Mauricio is talking about adding that in the future to the Ledn platform. Tether, you can see why, roughly $83 billion worth of market cap. A perennial number 3, right behind ETH, which is $187 billion. And the number 1, the big dog, is Bitcoin, $490 billion worth of market cap. Let's get out to number 2. Not quite available on the Ledn platform yet, but hopefully sometime soon. It is ETH. On our last show 2 weeks ago, right around 16.48 to be precise. And coming into the start of the show, like Bitcoin, a wee bit lower, 1561 when we kicked off the show. Down 86, almost 87 handles on the week. Intra-show, we flirted with a little bit higher level. Got up to about 1742. That was right after our last show. It was on August 29th last week. On Tuesday, the low as with Bitcoin coming this morning, 1552. So not quite 200, 190 handle range over the course of the last couple of weeks. As a result of testing these lows and continuing to probe some lows, we are seeing ETH vol also trickling back up. But again, a weird scenario. We had 2 weeks ago a 30 even in ETH vol, and now it's a 33 3/4. We've just come to accept this relationship of ETH being structurally more volatile than Bitcoin. It just has been that way since time immemorial. It's like small caps and large caps. You expect small caps to be a little bit more volatile than the large caps. And then for whatever reason, these days, Bitcoin taking the lead now from a vol perspective. As we just mentioned, Bitcoin 30-day vol threatening a 40 handle, 33 3/4 in ETH. So for the savvier listeners out there, maybe you're looking at some vol spreads between the two. This could be an intriguing time. We've been saying that for a while. ETH trading at a discount to Bitcoin from an implied volatility perspective is unusual and worthy of note. Let's go out a little bit farther out. Let's go out 6 months. On our last show, we were a little bit shy of 41, about 40.7. Coming into the start of the show now, 41. So it's barely budged. So that's kind of interesting as well. We're not seeing as much evolution on the vol front as we saw in Bitcoin. Skew-wise, same deal, very negative. Let's start in the weeklies. It was negative 4.5 2 weeks ago, coming in the start of the show today. Negative 7.5, so very similar to what we're seeing out there in Bitcoin. All the concern, all the interest, all the trading action to the dark side right now in the weeklies. Go out a month, similar story. Negative 4.5, though, 2 weeks ago. So ETH was already more bearish from a skew perspective than Bitcoin was 2 weeks ago, and remains negative 5.5 now. So getting a little bit more bearish out here over the last couple of weeks. Longer term, go out 6 months. Again, a similar story, but it was negative 2 weeks ago. It was negative 1.5. Coming into the start of the show now, it's about a positive 1. So it's flipped ever so slightly into the positive territory. In terms of OI, we had 2.16 million calls open, down about 20,000. And the puts, 703,000 open on Deribit, up about 11,000. So again, more puts trickling in. Not exactly surprising. We'll roll through some of the rest of the altcoin universe, and we'll tackle some of your questions, and we'll get out of here for this week, listeners. Solana, as you mentioned, having a bit of a rough time. It was 2060 on the show last time 2 weeks ago. Coming in and started today's show was right around a 1760, so pretty much off about exactly 3 handles on the week. So Solana taking a bit of a break out there. XRP, 52 cents 2 weeks ago, 47 cents this week, so down about 5 cents on the week. Again, not managing to maintain that upside. I think it got up to in the mid 70-cent range after all those decisions. And folks thought, okay, here we go. This is the first leg up, and seemed to stall out there and now has reversed that trend. Doge, as we mentioned, managing to cling to life here. 6.3 cents 2 weeks ago, 6 cents still this week. So not giving up as much as the rest, hence managing to cling to that number 7 spot out there. And Litecoin that came for this week, 65.14 2 weeks ago, 59.25 this week. I seem like that's been the trend for a while, down nearly 6 points. They've been coming for Litecoin week after week and show after show for a while out there. Cardano, 26.5 cents 2 weeks ago, 24 cents even this week, down about 2.5 cents. Polkadot, 4.59 2 weeks ago, $4 pretty much even right now, so down nearly 60 cents. And everyone's favorite, good old Shiba Inu, taking it on the chin this past couple of weeks as well. It was 0.00082 on the show 2 weeks ago. This week it is 0.0000071. So coming for it here this show as well. So unfortunately, all you Shiba Lambo aficionados out there, all you Shiba Lambo lovers, doesn't seem like it's going to happen this week. But what will happen is us tackling some of your questions. Let's get to it now. A little bit of the old crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Questions. You folks know how to get at us at Options on most major social media platforms. Questions at theoptionsinsider.com. Also works if you're hanging out in the live, then you can, of course, fire it off in the live chat. You get bumped to the top of the list. This week, we have a fun question of the week that very much dovetails in the crypto realm, so we want to get your thoughts on it, listeners. Quite simply, you know, everyone's obsessed with all things 0 day, 0 DTE. If you don't know what I'm talking about, then you've been living under a rock in the world of options, or for a lot of you, you're probably, for this show at least, very much newcomers to the world of options, so you're missing out on the big trend that is encompassing, engulfing consuming, call it what you will, the entire options world these days. It is the 0-day, the single-day options that are going up right now, predominantly in the indexes. So your S&P 500, those products out there, listing and settling an option all within 1 day. So very, very short duration, bite-sized type contracts. Folks are loving them. They can't get enough of them. They're pretty much the reason we put up over 1 billion contracts in the equity options market in August, a time when usually things go to die in the world of options because so many people are still slinging 0-day XPX options and some other indexes out there. But people have been asking us for a while. It's time for us to turn the spotlight back on you. What's coming next? What can we expect in terms of new products on the 0-day front? Which products or markets or complexes do you think should list 0-day options next? We put it out to you folks, the ultimate arbiters of all things. Gave you 4 choices: stocks, commodities, crypto, or volatility. So, of course, stocks, you're talking your single names now, your Apples and your Teslas. Commodities, they could be any futures options we talk about all the time on our This Week in Futures Options show with our friends over there at CME. Could be crude oil, could be natural gas, could be wheat, corn, gold, whatever floats your boat out there. Crypto, the big dogs, Bitcoin and ETH probably for now. And, of course, volatility could be any of the above. Could be VIX, it could be VXX, could be any products out there that float your boat. They all have compelling arguments for and against listing 0-day options. And right now, it's a very contentious battle. It just went live a couple of hours ago, listeners. So, of course, we have the full week for this to play out. Again, Ad Options is the place to go to make your voice heard. But right now, our audience is slugging it out. Single name stocks, so your Apples and Teslas, are taking it right now with 35.7% of the vote. But after that, it is a contentious race between commodity options, so your energies and your ags, 28.6%. Also, 28.6% for vol. So some folks wanting some 0-day VIX, for example. Right now, crypto bringing up the rear, listeners. Only 7.1% of the respondents choosing that. So if you want to change that, you want to bring crypto into the forefront. Maybe you agree you want some of these other product categories instead. Get over there at Options and make your voice heard. All right, listeners, that is going to do it for us on the Crypto Rundown this week. I want to thank our guest, Mauricio de Bartolomeo, the co-founder and CSO over there at Ledn. Check them out, ledn.io, the place to go to learn more. Some intriguing products. They have some options functionality baked in there. Certainly intriguing for a lot of you who are looking for more alternatives in the world of crypto. And of course, if you want more detail, more information, all this vol we're talking about, all this Skew has compelled you to want to learn more about the world of crypto derivatives. Well, of course, only one place to go. Amberdata.io is the place to go to kick the tires and light the fires on all that data and a literal ton more. It would crush you if you weighed it. So much data they have available for you. They carve up the crypto derivative space in so many interesting ways. We really just have a chance to hit the surface here on the show. Really just the tip of the iceberg. So get over there, amberdata.io, the place to go to kick the tires and light the fires out there. If you're listening to the rest of the network, if you're subscribed, we'll be back again, of course, with a lot more content throughout the rest of the week. We've got all sorts of fun pro Q&A sessions coming up this week for our pro folks, as well as, of course, Wednesday Options Bootcamp for a lot of you listeners of this show. Options Bootcamp, a great starter show for you to check out the world of options, see what some of these terms we're always talking about here on the show, what they actually mean, and how you can use them in your own trading. Thursday, also a good day for you folks because This Week in Futures Options airs on Thursday. We do touch on crypto on that program. The listed side, so what's trading over there at CME, but fascinating stuff nonetheless. Friday, of course, we have Vol Views and many other programs. If you subscribe to the full network, you'll get all of them coming your way. And, of course, if you want to go above and beyond, you want more content, you have a lot of great questions about this stuff, you want to learn more, you want to take deeper dives, pick the brains of some of the best minds in the world of options and derivatives. And, of course, you got some great unusual activity as well as live streams and, of course, giveaways. The THEoptionsinsider.com/pro. The place to go to learn more. We have to get on out of here for today, listeners. Back again throughout the rest of the week with our usual assortment of network content. And back again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.